Okay. Looks like we're live. Anyone that's in the chat, if you can hear me or not hear me, let me know. That'd be greatly appreciated. We'll wait a little while let come in, and while we're at it, y'all have probably heard me say several times that blah blah blah. You should do this and that, and I'm not a tax advisor, but well, guess what? I'm tired of saying that. That's why today we're gonna actually be talking to an actual tax professional. His name is Camari Ellis, and he actually has his own YouTube channel where he talks about personal finance, tax issues, and financial planning in general. Now, when it comes to taxes, I'm going to quote a book by Robert Kiyosaki. It's Increase Your Financial IQ. And in that book, the rich dad says that in society, taxes pay for part of society. With that being said, it's our responsibility to reduce that as possible. And doing that is a science within itself. So with that being said, we got to learn the tools that we can do to make that possible, as well as everything we can do in our power to those taxes. So with that being said, we're going to be talking about economy, people who drive for Uber, for Lyft, Uber Eats, DoorDash, these gig apps, how they can file their taxes, what type of deductions that they can take advantage of, and other things that revolve around taxes in the gig economy. We're going to start off asking a few questions that y'all have mentioned, and then we're going to go into a general Q&A that y'all can post in the chat. So without further ado, let's go ahead and bring on Camari Ellis. Hey, Camari, can you hear me?
Yes, sir. How you doing, Elijah? Happy Sunday.
I'm doing good. How about yourself?
No complaints. No complaints at all.
That's good to hear. I'm happy to finally bring you on because
this has been a bit of a journey, right?
Yeah, it's been a bit of a journey, but a journey always denotes progress. So that's a beautiful part.
Absolutely.
Yeah, before we go into the actual Q&A on the taxes, in terms of what you do, why don't you tell us a little about your profession and how you got started?
Sure. I'm a tax advisor and financial strategist. I've been in the financial services industry for over 20 years. Started out working with my dad. I used to go to his house, well, not his house. I would go to his office every day after school because he didn't want me to be a latchkey kid. Because when I got out of school, I would have to go home and be by myself. And this was in like elementary school. So at that point, I would go to his office all the time. I would wreak havoc with his employees, distract them, do all kinds of shenanigans, have fun, but it was destructive fun. But he got to the point where he got frustrated because, he's my dad. He's trying to make money to put food on the table. And, he said, you know what? Read this book. It was the book called The Publication 17. It's a book about individual taxation, or a publication from the IRS about individual taxation. Then once I read that, he started me down the track of doing taxes when I was a really, really young age, and doing bookkeeping and bank reconciliations and all that old fun stuff. I hated it at the time, but I'm actually super appreciative for it now.
Oh, that's a beautiful origin story, because it's one thing to go to school for something, but it's another thing if it was kind of in the family and those seeds of education were kind of embedded in you. It makes a huge difference.
True.
Yeah.
Now, the part I left out was I ran my dad's office for a few years because he had the tax office, and he also had some property management that we handled for a couple of clients of ours, along with a few of his properties. And then, like I said, I never really liked it. So then I left there, went back to school, Temple University, majored in finance. And then I went out to become a financial advisor, working with many, many agencies, getting Series 6, Series 7, Series 65 license, life and health license. And then I wound up going over and becoming a investment analyst and ultimately a portfolio manager, managing money basically on Wall Street for clients. Love that. That was probably my dream job. But then it came to an end. They said, we want to go in a different direction. We want you to move to this other job, which was more like accounting. It was fun. It was fund accounting. Actually, that was the title. And I said, nah, I don't want to do that. So I went out on my own, formed a partnership with some friends of mine. And we started, a practice to do financial planning, tax advising, and investment planning as well. That didn't work out well. That didn't work out at all. And then I found myself here after this next invention and recreation of myself with the Philly tax team. I'm an enrolled agent with the IRS, which means I can help clients practice before the IRS, kind of have the same authority as a lawyer would or a CPA would, helping people with IRS tax debt before the IRS. So it's been quite the journey to get here.
Oh, that's nice to hear. I mean, obviously, there are some struggles involved, but when you come out on the other side, you really hear that story. But everyone, I'm gonna apologize because it just started getting crazy weather-wise over here, but we're gonna make it happen. That's fine. So about how long have you been in the YouTube game? Because I've seen that you've had a YouTube channel for a little while.
So that's a trick question, right? So I think my first YouTube channel went up in like 2011 or 2012, but I never really took it seriously. I put up a video two or here or there. They all sucked. And then I think I kind of got serious around 2018, 2019 with YouTubing and making videos and being more, more present in terms of content creation. I started out at radio, right? That's how I kind of got involved in content creation. I had a radio show and then kind of fell in love with social media. So I love radio, not really so much for the camera. But what I found was that, I got dared to do like a 30-day challenge. And then once from there, I started taking it serious and going forward because I was actually afraid of video, to be honest. And I don't really like to be afraid of anything. So I kind of pushed myself to do it, even though it's still not my first love. But I saw that everyone really is gravitating towards video. And the beautiful thing about video is you can actually repurpose it really quickly and cleanly and just stripping out the audio. So I said, all right, I can get 2 for 1 when I do the video. So it made sense.
You're the opposite of me. I like video. I hate video.
Really?
Yeah. So that's been to learn throughout the years. I can't really explain why I don't like audio, but it is what it is. But
the most important thing in video is actually audio.
You know what? You're right. Maybe I'm kind of anti-podcast. But I think about it, I've been doing video the whole time. I mean, audio by default.
Right. Right. I got you. I mean, listen, some people are naturals at video. I think those people who kind of gravitate towards video probably would put audio on the back burner. And so, they really got to start getting their chops. But I don't think I'll ever be like the super duper great charismatic person on camera. But I think I'm doing all right. I'm getting better.
Hey, everyone's first videos, I don't care what they say, they suck. First videos, if you go and look at them, I look stiff as hell.
Yep. Nervous.
Yeah, this is a good time to segue into the general Q&A for gig workers. So everyone, if y'all have any questions, leave them in the chat. We'll get to them later once we address these main questions first, but you can go ahead and start leaving them in the chat. So like when it comes to people who drive for Uber, Uber Eats, Lyft, a lot of times they may be coming from scenarios where they don't have to focus so much on taxes because a company may do it for them. They're coming from a job scenario. Then they enter the gig world and it's kind of like, okay, I'm just going to start driving or making money with rideshare or delivery. And they don't realize the tools they have at their disposals, what deductions that they can use. So what advice would you give to someone? Let's say I just got off from working at Amazon. I'm going to start driving for Uber. Like what advice from a tax perspective would you go ahead and give that person?
Well, I got a question. Well, let me make this statement first. So sometimes people that do gig work, gig economy kind of get fooled, right? Because it's a gig. Usually when you say gig, it's affiliated with work, 9 to 5, 8 to 12, some kind of overnight shift. But in the actuality, you're an actual business owner. And so you should start to think of yourself as a business owner and conduct yourself as a business owner. Now, to address your question, if you got off from Amazon and then went to Uber, so are they an employee at Amazon or are they a 1099 worker? Because there's plenty of people that are delivering for Amazon as well, that are part of the overall gig economy. So which I don't want to give the wrong answer here.
All right, let's one is an employee for Amazon, and for whatever reason, quitting, so they decide to go full time and they're driving for Uber or Lyft or something like that.
Well, I'll say this before you go full time with any gig type situation, Uber, Lyft, Grubhub, Uber Eats, and any of those. Think about what you're leaving behind at your job. Think about if there are any benefits, health benefits, right? A lot of times a lot of our gig economy workers are younger. There are older ones out there, but a lot of them are younger. They don't think about health insurance. They don't think about medical coverage. They don't think about any of that because, when you're young, you think you're invisible, rightly so. Like, I'm not mad at that. But just think about this. If you ever get sick, and young people do get sick, sadly, how are you going to pay for it? Right. And would you be better off just working your job, maintaining your benefits, saving your money, and maybe kind of doing your side hustle or your gig or your Uber on the side instead of going full time? Which one is going to maximize you getting the most money in your pocket along with the most, let's say, tangible benefits? Because even though healthcare is intangible, I call it tangible because when you go to the doctor, you can actually feel that bill when you right. So, but just kind of run through all those different scenarios. Now, this doesn't qualify for people who work in toxic environments. If you are in a toxic environment, leave, because that toxic environment is killing your health anyway. So it's no need in staying there. Now, I talk to some people sometimes and they feel that it's a toxic environment because their boss asked them to do some work. That's what you're there for, right? You're trading your time to get their dollars. But, if you have a boss that does that and you do your work and you do it reasonably well, and then they want to talk to you all kinds of ways and berate you and give you ungood work conditions, then yeah, you should leave. You should leave. Rock out, go somewhere else, figure it out. Life's not worth the shortcomings of that. But to answer your questions, right, what should you be thinking about? So number one, when you work a 9 to 5 and you get paid, it's mandatory that they take taxes out of your check. When you work 9 to 5, let's say now you're working 9 to 5 for yourself. You are your own boss. Uber or Lyft or any of those folks do not take taxes out of your check. And I see a lot of people get jammed up. So you have to be pretty disciplined when you do this because, again, you are a business owner. You're not a gig worker. You're not a 1099 contractor or employee. You are a business owner, even though you make it a 1099, right? Even though they may call you a gig worker, you are a business owner. And so you are entitled to all the tax deductions that any business owner would have, whether you are a LLC, corporation, a partnership, any of those things. You yourself, as a gig worker, as a driver, or any of those things, are entitled to all your business tax write-offs, whether it be mileage, whether it be food, like let's say you do some kind of business meeting. Maybe you say, you know what, I can take my Uber hustle and I can actually parlay this into a real business, doing some kind of transportation services, and you meet with someone who's going to send you clients. You can write that off. Now, you can write off you just going to McDonald's. That's not a legitimate write-off. Right. But you can write off if you take, again, this guy or gal who has great relationships in the transportation field. Maybe they know a lot of consultants, a lot of executives who need transportation to the airport, to the train station, to jobs, maybe sometimes interstate. By the way, I used to drive Uber and Lyft. So I'm speaking about this firsthand. Right. So when I was driving Uber and Lyft, I always kind of would think about the real benefits, right? Because I always felt that unless you're really, really, really in a great area, in a great spot that's really busy, I think the advantages are more geared towards the company. However, some of the relationships that you meet doing that can be priceless. And can lead to a lot of other things. So when I did it, I wound up getting some consultants because I got lucky meeting some consultants, some lawyers who would take, like, say, the same train and had to be to the train at the same time. And they didn't want to wait. They didn't want to wait to try to get a driver through the app. And so they said, hey, you're pretty nice. Would you like to be in my house at 6 o'clock every day? Get me to the train station by 6:30, and I'll pay you XYZ, and it'll be outside of the app. Yes. Now, technically, you're supposed to pay tax on that. I know the platforms do not look favorably upon that.
They
But
really don't.
that's why I'm giving a disclaimer. That's why I don't do it anymore. So I get my statute of limitations is up. My statute of limitations is up. But listen, it's a great way to build. You could build a book of business. If I was like, I actually like to drive. So I said to myself, if I really wanted to do this, I would go buy a nice car, maybe like a Chrysler 300 or maybe a Lincoln or a Cadillac or maybe even an SUV, right? And I would start building clientele by marketing to lawyers and accountants and consultants, people who travel a lot, who don't want to necessarily wait for the Uber and Lyft. Like there is a great possibility there. Yes, everybody's going to kind of lean on the Lyfts and the Ubers. However, there are a group of people who just want the convenience of someone being there when they're ready to go, someone to drop them off, and then someone to pick them up when they're ready to come back. So I would look at it as a real business opportunity. I wouldn't just look at it as just something to do. So again, with that said, I kind of got off on a tangent because I was trying to explain how you could write off your meals. So again, if I met with somebody who, was going to connect me with other people that might need contacts, I can take them to dinner or lunch. I can write off a portion of that bill. Actually, the IRS has had a change for meals. Now you can write off 100% of it. It used to be 50%. Now you can write off 100%. Right there. IRS, listen, the IRS code, if you don't learn anything else today, just remember this. The IRS code, the tax code, it incentivizes people to be helpful to the overall United States economy. Right. So right now with COVID and everything else that's going on, they said, you know what, we're going to make meals 100% a write-off. As before, they were only 50%. Mm-hmm. Why? They want to give people more incentive to go to restaurants. They want it because the restaurant industry is hurting. Mm-hmm. If the restaurant industry falls any harder, you're going to have more layoffs. So they're trying to incentivize folks to kind of protect that industry to a certain degree. And so just be aware of that. Just be aware of that. But again, you can write off things like meals. If you're giving your passengers water or candy or, some kind of favor. Like I also know some people would do like these guides around town, and they would actually have them printed up and give them to them with their number on the inside of them so they could call them back when they needed a ride, right? It was marketing for them. You can write that off. You can write that off. Car maintenance, you can write that off. I'm trying to think. Registration fees, gasoline, any of that. So you can write all of that off.
Nice. And just to expand on that meal portion. So let's say I'm a driver and I'm driving 8 hours a day. 8 hours in one day. So I'm out most of the day. And I decide to swing by such and such restaurant to have dinner. Like that meal is technically I'm out working. So does that qualify as a deduction from a meal perspective too?
Technically, no, because it's supposed to be for the benefit of the business. And I know what you're going to say. Well, hey, I've been driving for 8 hours. If I don't eat, I'm going to crash. That's for benefit. But you would have had to eat that anyway, right? So you got to be able to show. You got to be able to show that it was a real ordinary and necessary cost for the business for it to be a legitimate write-off.
Nice, because there are some misconceptions that float around in the gig economy, and that's one of them. And you brought up a good point about when it comes to health insurance, like and for those of y'all that are listening from a financial nap is directly geared towards young adults and even the app lifestyle. I've looked at my demographics, and a large portion of my demographics are between 25 and 35. So just as young people, you want to really take that in consideration before you quote unquote leave the 9 to 5 and go off and do this gig stuff. It should be looked at as a side hustle in general. And if you do end up doing it full time, have a game plan for it to be temporary while you get something else off the ground. And as far as driving people from point A to point B, I used to do that a lot. I say the technical way is to do it inside the app, so you'll be covered buy your Uber and Lyft's commercial insurance. But building your steady clientele, having them call you, and then going there, then they keep requesting until they get a driver. That can be a good way to build your network and make money.
Yep.
And a lot of people are sleeping on it. If you build a lot of rapport with one particular passenger, a lot of times they wouldn't mind having you again. They'll ask you, hey, give them the methodology on how to make that happen.
Listen, I have a lady that still calls me to this day. I've been driving for at least 3 or 4 years. But she'll she wants to run to the airport, and she's an older lady and she doesn't want any fuss, and she likes me. Matter of fact, I've even sent my son to drive her when I couldn't do it, and she's cool. I'll drop her off at the airport, then go schedule the time I'm going to pick her up. And so I got two fares already lined up for just picking up that one person. So it works. It can work.
Nice. So like when it comes to taxes, like there's some confusion about this in the gig economy about the two methods that you can use as far as deductions, the standard mileage deduction or the actual expense method. Like what advice would you give to gig workers on how to choose which one would be more practical for them to maximize their tax savings or deductions?
Most times the standard mileage is going to give you the most bang for your buck, especially when you don't keep good records. So like you said, you can do the standard or you can do the actual. You should keep good records to protect yourself from the chance of being audited by the IRS, because they can blow it off. Because a lot of people like to just dream up numbers. And I get it. It's cool. But if you can't document those numbers, and God forbid the IRS calls your number and they say, well, how many oil changes did you get? And you say, I got 10 oil changes. All right, where are the receipts? Where are the invoices? Because you wrote off that you spent $400 on oil changes at $40 a pop. I mean, that's not unreasonable, but where's the documentation? So you got to have documentation in order to back it up. The other thing I would say about standard mileage, so again, standard mileage probably is going to be your best way to go. But when you use the app only tracks the time you are, the time you're actually on a ride. It doesn't track the whole time you are out driving, working, or waiting. So I would also recommend you not use whatever statement you get from Lyft and Uber. I would say keep your own mileage, keep your own mileage log, because 9 times out of 10, if you keep your own mileage log, it could be the difference of you saving thousands and thousands of dollars on your taxes, because you will have it more accurate and more close to what you actually did while you were out driving.
Nice. Yeah, and there's a lot of confusion about that, and that's the way you did it is perfect. Because for those of y'all that are wondering, like, well, how would I keep good records? There's plenty of apps out there that will help you do it. Like one I use is a Stride, and they literally have a place to where you can take a picture of your receipts, and then put the amount and put whatever it's under, so rideshare or delivery, and that's just one app. There are plenty of apps. You just gotta search for them. But if you're lazy, like, feel free to look up that Stride.
Yeah, I never heard of Stride before. I usually recommend either Mileage IQ or QuickBooks Self-Employed, but I have to look up Stride. I definitely have to look up Stride.
Yeah, like one thing about Stride is you can track your mileage with it. So as soon as you start your day with Uber or Lyft or whatever, you just hit the plus button on the app and it starts tracking the mileage. And that's so important because in ride sharing delivery terms, there's 3 periods. It's period 1, period 2, period 3. Period 1 is when you're looking for a trip or delivery. Period 2 is when you've accepted a trip and you're heading towards the person or towards the restaurant. And period 3 is when you're dropping off the food or the passenger. Apps only keep track of period 2 and 3. Period 1, if you're not tracking your mileage, you're giving the IRS a bigger check than you need to. I'll put it that way.
That's correct.
I was actually going to segue into this next question that was asked by a viewer. He is actually on a bike, and with him being on a bike, he was asking what are some good deductions that he can utilize, because a lot of people do these apps in a car, and there's some things you can do on a bike too. In fact, I have a friend that's making over $20 an hour doing DoorDash on a bike, which is pretty crazy. I'll leave that link to his video linked in the description. But what advice would you give to someone who's on a bike?
So are we talking about just a plain bicycle or a motorbike, like a motorcycle or moped?
Well, let's say bicycle, because he did say bicycle.
Okay. Well, kudos to him, because I'm pretty sure he's in good shape. I probably need to get like him. But you have the same options for the same expenses, but obviously you can't write off gas. It's a good question though. I don't know how mileage will be handled. I have to
Like, I'm assuming he would have to probably use the actual expense method, because like mileage probably,
Right.
yeah, like in that situation, it probably would be more practical to look at the actual expense, because I'm not sure if mileage could play a factor in that. I don't know. That's just a good question.
Yeah, I never even thought about that. I never even thought about that. But I'm looking it up right now real quick.
Because that's a damn good question.
Yeah, it's a very good question. I've never had it before. Well, listen, that's why you got to stay humble and be a lifelong student, because you can learn something anywhere, anytime. Man, so
While he's looking that up, I will say that unless a family member gave it to you, I'm assuming you probably paid money for that bike. By default, it's probably tax deductible.
right. So definitely the cost of the bike will be tax deductible. Any maintenance on the bike will be tax deductible, or tax write-off. I'm trying to think.
If you use a phone mount and you mount it on the bike, that'd be tax deductible.
The phone mount or the phone?
No, the phone mount. Like what's keeping your phone steady while you're pedaling.
That would absolutely be tax deductible. Any of your gear that you're using to deliver will be tax deductible.
All right. Yeah.
And even your cell phone is also tax deductible too, for anybody that's on a bike or in a car. However,
that was my next question. He beat me to it. I was going to ask, how much can you write off your cell phone reasonably without triggering an audit? Because some people try and write off 100%, and half the time they're on the phone with their girlfriend, and the other half the time they're actually using it for business.
So remember, it's a business expense, right? So it should be anything that's ordinary and necessary for business. So if you have one cell phone line and you're using it for personal and business, please do not write off 100% of your bill. You're asking for a fight, and you don't want that fight with the IRS. You're not going to win. So I would say use something more reasonable, 60%, 50%, and also, do a pretty good job of documenting the hours that you work. Now, again, when I do tax returns, I do a tax return based on, can it stand up to the defense of an audit, which means that if the IRS pulls my tax return, will I be able to defend? Will I be able to prevail, right, and be able to protect my client? Because if not, then oftentimes it usually costs my clients more money, and sometimes, not always, but sometimes it could result in them losing money or being fined and penalized, and nobody likes that. Nobody likes that. So, but yeah, so I would say somewhere 50, 60, 40%. I would just try to be as honest and accurate about that as possible, and be able to document and show that and communicate that.
Okay. And so on the flip side, let's say if you have two phones, because my friend that does a bike, he does DoorDash on a bike. He actually has two phones. One is personal use and one is strictly for business. So if you have one strictly for business, in that scenario, you could write off 100% of it, right?
Absolutely, because it's strictly for business. And I mean, listen, a lot of people think the IRS and these tax authorities are dumb. These people are not dumb. So if they see you with one phone, they're like, you're young, you're partying, you're having a good time, you probably got a girlfriend. Bay is out there somewhere, right? It's like he's using his phone to call his girl, or she's using her phone to call her guy, right? So they're not stupid. They're not stupid.
You know what? I got a question as a YouTuber because some people do actually do this gig economy stuff, but they have YouTube accounts. I've
Mhm.
made a lot of videos in the past using my phone. So does that give any leeway to up maybe 50% to 60 or 70% in terms of usage?
How many phones do you have? Right,
One.
because I would assume your YouTube job is separate from your Uber job, right? I mean, they may coincide, but your YouTube money, if you are indeed monetized, is its own separate line of business. Is totally different than Uber, right? Uber has its own issues, so like it's two separate businesses. Unless you are doing YouTube for the sake of getting more Uber. Like, because I know some people use YouTube to get their referrals up and things like that. Especially back in the day, people were making buku money using YouTube to get people to get on under their referral system.
You
So
talking to one of them?
you did.
Oh yes.
Oh, nice, nice, nice. That was smart. That was smart. But you can do that now. You can write your phone off for your YouTube business. You absolutely can. But again, I would just be reasonable about saying how much you use it for personal and how much you're using it for the business. So Elijah, let's use you as a kind of crash dummy in a scenario. You
Hey,
use
use me.
one third, let's say for your Uber business. Let's say you have, let's say another third for your personal and then another third for your YouTube business. Right. So that's roughly 66.6% of your phone bill, right, used for your business. But it'll be recorded separately
Right.
on two different schedules. That's
Gotcha.
how I would do it. That's how I would do it. Another tax pro may do it differently, but that's how I would do it.
All right. Yeah, I like that. It's a very methodical approach because let's say if you do get audited, well, you have the proof to back that up.
Right. And that's not hard to kind of go back and reconcile and figure out. So, again, you just want to be able to have a reasonable case that you could discuss and argue and defend against.
Right. All right. So we'll do two more questions, then we'll go into the general Q&A. So
Okay.
like this is one that's very common, but a lot of people wonder as a gig worker, do you need to pay quarterly taxes? Like, how does that work?
So again, you are a business owner, right? You're not a gig worker. You are a business owner. So repeat after me. You are not a gig worker. You are a business owner. I know that's the popular thing to do and say, right? But again, you are entitled to all those things. And yes, if you think you're going to owe more than, let's say, $2,000 by the end of the year when it's time to do your taxes, you should be filing estimated payments or quarterly taxes. I tell folks to break it up into monthly payments because it tends to be a little bit more manageable. Most Americans are not good savers. So anytime they see money in their account, they like to spend it. Sadly, corporations spend billions of dollars a year on figuring out how to trigger people to spend money on their products, and it works. So I would say try to break it down quarterly. Figure out what your profits are, or what you can do is here's an easier one. Let's say you've been doing a ride share for like the last 2 years. Use your previous year monies that you owed and break it down to 4. That's technically what the IRS would do, right? So, for example, we are in the 2020 tax season, but when you filed your 2019 tax return, you owe $2,400. So that would break down to roughly $600 a quarter, or you could pay $200 a month, and you would be squared away with the IRS.
I like that. You're very methodical about this stuff. I like that.
I've been around for a long time. I've had a lot of bumps and bruises.
All right. And the last question I'll ask before we get to the general Q&A is so about this stimulus. According to the IRS, if for some reason you didn't file a 2019 tax return, you're not going to get a stimulus check, but you can claim it on your 2020 tax return.
That's correct.
Or let's say you're part of the bunch of people who, for whatever reason, they're not getting a check. They said that some people might fall in that category, but you can still claim it. Like,
Right.
Do you could you expand a little on the process of how that's going to work? Because some people are, you know.
So I'm gonna try not to be too technical, but what the stimulus it was a direct payment, but it was a tax credit. It was a tax credit that was a direct payment. Again, going back to the economy, right? The tax code is usually written to benefit the overall economy. So always keep that in mind. And so
Mhm.
they said, you know what, we're going to give you this tax code in advance. We're going to advance you this money. And so you can get it in your pocket. And then this year, when we go to file those returns for 2020, you have to write it down. You have to claim it. Some people might have gotten too much. Some people might have gotten too little. At the end of the day, it should all balance out, and you shouldn't owe any money on that credit 9 times out of 10. But if you didn't get it, you should 9 times out of 10 get something back at the end of during this tax season. Actually, when we start doing taxes now on February 12th, so it's not too late to get something potentially. But I'll be honest, I haven't seen the new forms yet. The IRS is still retooling everything because every time there's a tax law change, right? Every time Congress changes something, the IRS then has to update it. So remember, the IRS works for Congress, not the other way around. The IRS works for Congress. So once Congress figures out everything, the IRS then has to say, well, how do we actually do this? What forms should this go on? How are we going to collect the money from the people? Which Congress never really thinks about anyway. They just say, hey, do this. It's like that parent that says, just do as I say, not as I do. And you know that doesn't usually wind up being a good thing most times. So
Nicely said.
right. So there's always issues. That's why the IRS has pushed back to February 12th. And then I'm hoping the tax season this year will be cool, but I know it's not. I know there's going to be issues. All kinds of issues. I mean, listen, the IRS right now still has over 3 million pieces of mail that it hasn't opened yet. Just the IRS has been hit with COVID as well. They've been dealing with it as well. I mean, they sent a lot of their people home to work, and that's been a bit of a transition. So they don't have people at the centers to open mail, so it's hard. So they're going to be trying to figure out how to open mail. They just got the last stimulus package, right? The $600. Now Joe Biden, who just come into office with the Biden-Harris administration, is also saying they want to do an additional $1,400. When is that going to happen? I don't know. How's the IRS going to deal with it? I don't know. Now, normally that shouldn't go into practice or into official tax law until 2021, so maybe later on this year. But weirder things have happened. They can make the bill retroactive, and that could just make everybody's lives a lot more cumbersome or a headache. So,
all right. So,
your question.
you did. You gave the basic premise, but you also mentioned that to some degree we got to play it by ear. So, kind of set your expectations there too.
That is correct.
All right.
I mean, let me just say this last thing. If anybody's like really expecting a tax refund this year, I wouldn't get my hopes up because I think, well, one, we already know tax season's been delayed. Tax season's not starting till February 12th. For many of my people who are getting EIC or earned income credit that have children or adults that they're claiming they get the extra money, that probably won't come out until March because they put a delay on that anyway. So when people start filing in January, normally they tend not to get those refunds until after February 15th. So I'm not sure what their schedule is going to be like, if they're going to add an additional wait period, because there's so much fraud in the system. That's one of the reasons why they did it. So it's going to be interesting. It's definitely going to be interesting.
So everyone, as y'all listen to that, just make sure y'all set your expectations based on that, and don't start expecting things like extremely soon. They have a lot of work to do.
Don't spend your money before you get it.
Yeah, that too.
Yeah.
All right. We'll go into the general Q&A.
Okay.
So DBX, what about using the rental program through the apps for a rental car? What is the maximum we can write off when using rental cars?
Whatever your cost for the rental is, whatever the expense is, or you can use the mileage when you are driving that rental car. So it's one or the other.
Okay. DB said I think mileage wouldn't be a write-off for someone else's car.
You
What's your
can
view on
use it.
that?
I would document it really, really well, but you can use it. Again, I would just document it really, really well because you're still in the commission of doing business.
Hmm. Okay. And let's see. What about monthly car payments, car insurance, and your residence? Uh, you kind of explained that already, but
Well, monthly car payment, you can write off the interest that you pay on your car.
mhm,
You definitely can write off the car insurance. However, if you just have one car and you're doing, ride share and, personal things in your car, make sure you account for that. Don't, if you pay, let's say you pay again, let's say $2,400, that'll be the number of the day. You pay $2,400 for the year, $200 a month for insurance, and you also use it for your personal. Don't try to write off the whole 2,400. Figure out what portion of it is. That's why record keeping is so good. And so apps like, what were you talking about? Stride, I think you said?
yeah,
Stride and Knowledge IQ. You want to use those because they'll help you in the long run. Because you can then, if you use them right, now if you don't use them, it won't matter. Trash in, trash out. If you don't use it, it won't matter. But if you use it, you can tell what's a business, what's business mileage, and what is personal mileage. And you want to be able to keep that as a record so you don't get any trouble just in case the IRS tries to audit you. Now, for the record, I want to be very transparent. I'm not a fearmonger. The case of those audits are very low, like super duper low. Now, the IRS has announced that they are going to start. They said they're going to increase audits by 50% next year, right? And there's several ways a person can get audited. They can get audited by kind of doing something crazy by, let's say, saying that they spent $10,000. Let's say they spent $10,000 on repairs on a 2020 or 2021 brand new car that they just brought. So that's going to kind of draw a red flag. Like, listen, people do all kinds of stuff. You laugh. I mean, I laugh too. Don't get me wrong, but you laugh because you're like, that makes no sense. But people do it, and they do it all the time. And so, I mean, it happens. I like to look at a lot of the federal cases because people don't realize that tax pros get taken to jail all the time when they do something wrong. If they do something wrong, they get taken to jail. I don't know if you remember years ago, there was a lady that called herself the tax refund queen. I think she was from Florida, and she would be on social media flaunting that she got all these tax refunds. Well, comes to find out, she was actually stealing people's identities and then snatching their tax refunds. But she was flaunting, and then got caught and then went to jail. And so at the end of the day, it's not worth it. So I like to say, even if the possibility of getting audited is low, you still want to protect yourself because again, IRS audits are not fun. They like to know every nook and cranny of your life as possible. I mean, the IRS, a lot of people kind of paint the IRS as to be super duper vigilant on these things, but they're regular people too. And they're just trying to do their job a lot of times. Sometimes, like regular police, right? The IRS or the tax police, like regular police, they can be abusive. However, all of them aren't bad. Not all of them. So it just depends. But you want to be prepared if that situation arises. So that's why I say, do it right. Do it right. Keep good laws. Keep track of everything.
right. And I know some people like to look at the IRS as like this big boogeyman, but if we're being honest, as a business owner, they're actually requiring you to keep accurate records, and that's what we should be doing anyway. Just if we're going to be completely honest.
You are 1,000% right, my friend. Guess what? The better records you keep, the better business you can run.
Yep. When it comes to, because some people will take their experience from working on these gig apps and they may actually start another business. And if you get in these habits, when it goes to getting loans or getting grants, they're going to want to see your records, and you'll already have those habits built as opposed to looking like a deer in the headlights.
That is true. That is very true.
Yeah. We got a hey from Brooke. Well, what's going on, Brooke? Appreciate you tuning in. Todd, I purchased 2 phones, one for Uber, one for Postmates. I may add other deliveries too. You know what? I got a good question about that. So I don't know if he has a personal phone and those other 2 phones, but if he's using one for Uber and one for Postmates and one for delivery, one for rideshare. Like, could he write off both of those, or?
I mean, let's just go off the data he gave us, right?
Mhm.
Let's assume that person was already taken care of. But from the data he gave us, he has a phone for Uber, that's a business phone, and he has a phone for Postmates, that's a business phone. So he has 2 business phones that he can write off, just on the surface. Now, if he's using them for personal use, I would just make sure you document it. But again, I'm going to assume that he's using them for the business.
Right. He also mentions if you pay for gas, it should be a write-off. You're paying for gas. But if he serves me correctly, wouldn't that fall under the actual expense method?
It does.
Yeah.
So you got 1 or 2. You can do standard or you can do actual. So, and Ty just said he has 3 phones. So he's got 2 phones for the plug, and he's got 1 phone to be personal.
Yeah, he say, I'm gonna spend the money anyway. I'm gonna spend it on my business and not give it to Uncle Sam. I can respect that.
Yeah. You gotta weigh that out. You gotta weigh that out. Sometimes I see people that want to just spend things just for the sake of spending things, using that same ideology. But you gotta remember, for every dollar you spend, you might only get back anywhere from 15 to 27 cents back in tax benefits or tax write-offs. So it's not a dollar for dollar benefit. Just remember that. It's not a dollar for dollar benefit.
Yeah, that's true. Brooke asks, do you recommend deducting the asset the first year we have it or over time? That's a good question. So like a good example is this MacBook I'm recording on. I bought it last year, and I would have the option to deduct all of it in that year or depreciate it over time. I chose all in that year, but like, what advice would you give to Brooke?
So it depends. So usually about 2,500, anything over 2,500, they ask for you to do what they call depreciate or do it over time, as Brooke said. But it also depends, because there's other little loopholes. Like there's certain like assets you can write off and you can take it on the first year. It really just depends. I would say 9 times out of 10, I would take it up front. But if we're talking about, let's say, a rental property, because I know a lot of people that are in the gig economy ultimately want to build up more passive income. And I know real estate and rental income is a hot spot for many of them. You're going to take the expense over the life of the property or over the life of time. And that's usually, for a rental property, is usually 27.5 years. So it really depends. Some years you might know you're going to have a higher tax bill than others. Some years, you might have a super low tax bill. So the year, let's say like this year, you got a super low tax bill. But next year, which is actually right now, right, because we're in the 2020 tax year, but it's year 2021. So, if you know that you've had a massive increase in business in 2021 and you expect and project it to continue to be massive and grow, you might say, you know what, I'm going to stretch out this expense because I know I needed to reduce my income for next year, for this year, right? But for next tax year. So you might say strategically, I want to push it out. But, again, it all depends. There are no one size fit all scenarios. There's no cookie cutter solutions.
Right. So that's going to depend on a case by case basis.
Absolutely.
Yeah.
For Brooke, though, because we all know Brooke is like a social media guru, more than likely it would probably be best for her to take the expenses in the first year. More than likely. But again, sometimes it may vary.
All right. And DB, I know about the gas and such. It's about paying for the car itself. I think we already addressed that. Todd, whether you rent or make payments, you be able to put on taxes, but they will answer it. I'm not sure what you mean, Todd. Are you if you could elaborate on that, we could do it. Brooke has another question. So, question: my business has been open 3 years and always do self-employed taxes, but my S corp took effect in October. So, do I change for this year?
I would need to see if your S corp went back to January of 2020, or if it was just starting. Like, I need to see the documentation, because Brooke is definitely capable, but I always hesitate to give answers like that because sometimes people will read something and it's not quite right. But more than likely, Brooke, just using your scenario, you shouldn't have any self-employment tax in 2020. However, since you are now S Corp, you are required to pay yourself a market rate salary. So hopefully you paid yourself as an employee, right? So the IRS knows that people are trying to get out of paying the self-employment tax. That's why most of these social media memes out here that say former S Corp are trash, like they're absolutely trash, because the IRS knows you're trying to get out of paying the self-employment tax, which is like 15.3%. However, when you're an employee, you're paying into FICA and Medicare and all that. That's in effect what SE or self-employment tax covers. The difference is when you're an S Corp, you get to control more of it, right? Because what's market rate, right? I mean, it's kind of wide, right? You could have I have clients who have $1 million in, let's say, profit, and many of them may only pay themselves, let's say, $100,000 in salary. So they put themselves on payroll for $100,000, but that not $100,000 is then going to be taxed as a distribution and not as self-employment tax, not as a 9-to-5 payroll employee either. So there are some loopholes, but again, you got to do it right, and there is no free lunch. But congrats, Brooke, on getting your S Corp. That's pretty dope. That means you're making money. Don't forget about you make it to the big time.
Right. And it looks like Todd expanded on that. So one is personal, 3 phones. So
yeah, that's what I said. I said he got 2 phones for the plug and one for the boo.
All right. So I got one final question to close out. I think it's pretty appropriate, but you as a tax professional, if someone's interested in hiring you, what can they do to make your life easy? Because I know some people, when they hire a tax professional, their stuff is so all over the place. It's like, you're making it hell for me.
Okay. Number 1, follow the law. That's first and foremost. Keep good records. And I love an informed client. I hate a scammy client. And let me give you a scenario. I have a client right now who thinks he knows everything, does all the research, but he's missing a lot of times the context. And he's always trying to be slick. And I'm like, no, you can't do that. And sometimes we wind up having these really contentious /arguments or contentious conversations /arguments that, 1, are a total drain for me, and 2, a total waste of time. If you don't trust me, then I'm staying up to code. Now, I don't know everything, right? I have had clients come up and tell me, Camari, did you see this new X, Y, and Z that they made in the tax code? I might have not seen it, right? Because things are changing, right? This last tax code change, I still have not reviewed everything just because of the timing in which it happened and everything that's coming out. There is still not guidance on a lot of these things per the IRS. So it's hard. It's really hard to do it. For example, the Family Paid Leave Act. A lot of people are going around doing memes about it. I still haven't seen any guidance on it. So people are saying, the IRS wants you to take your paid leave. Yeah, okay. I want to see how this one plays out because I don't think it's going to be as sweet as everybody thinks it is. However, again, I still have not had the time to number 1, the IRS still hasn't really come out with final guidance on it. That's number 1. 2, I haven't had time to check up to see if the final guidance has come out, right? If for some things that have, and what implications it may have on certain clients and not for others, if that makes sense. So it just takes time to do the due diligence on this thing to really talk about it properly, right? Brooke just brought up something that's really nuanced, right? She talked about the S Corp. Well, I've worked with a bunch of those over the years, over 2 decades of experience. So I'm got that down pretty bad. This is something that's coming in brand new this year. And then so I might this client be like, hey, I want to take that federal leave, but he probably will have a loss on his tax return. And so 9 times out of 10, that credit may not impact his business. It could, but it wouldn't. But a lot of people want everything that they can get. And I get it. We pay tax on everything. Listen, I'm a big proponent of saying taxes are your number one expense usually over your lifetime, because you pay taxes state level, federal level. You know, everybody on here is ride share or gig economy. So, you know, look at the tax on the car you brought, or the tax on gasoline, or the tax on your cell phone. Like, there's taxes on everything. We are overtaxed. However, there are certain things that are legitimate, and there are certain things that can potentially get you put in jail if you go too extreme with it. So I'm with going into the gray area and pushing for a client that has good documentation and that has the right to use certain tax write-offs. I'm not, however, willing to dream up numbers and just do something just for the sake of doing it. Like another one that's floating around is hire your kid. Hire your kid. All right, hire your kid. Great. Is your kid going to do work? Or are you just hiring your kid for the tax write-off? Well, that could be really problematic. There's nothing wrong with hiring your child. But when you do it just to do it for the formation or the formality of putting it on paper, and they're not a legitimate employee, then it becomes problematic. So, you know, I don't want to deal with anything that's legitimately problematic. So if you can do those things again, follow the law, keep good records, then you'll be pretty good. You'll be pretty good with me and anybody else. It's funny. I was having a conversation with another tax pro, and they said sometimes a client's ignorance will make you think that they're trying to break the law, when in actuality, they're just using the normal jargon and slang. So they might say something like, I paid this lady a kickback for getting me some business. Well, kickbacks are illegal, but I know what they're talking about. They might have given a commission, or they might have, gave them a fee for being a referral or marketing source. So, you know, certain words sometimes trigger people to think, hey, this person's not trying to be honest here. So again, I would say keep good records, follow the law, and just try to educate yourself as much as possible. Don't just lean solely on your tax pro. I would really start getting into more of the tax code, because again, it's one of the most important things that will impact your ability to make money, your ability to build wealth as you get older and more mature in your career.
Nice. And piggybacking off of that, I always say a lot of times with these things, the balance lies between being a generalist and a specialist. Like in terms of taxes, you're the specialist, and you want to hire someone that's a specialist. But that doesn't mean you should know nothing about it. Because let's just be honest. If you don't know anything about it, that could create problems in another way. You want to know at least a little about it, and just be a little above that generalist place. And if you decide to go further into it, by all means. But just realize that there's a difference between a generalist and a specialist. Sweet spot for everyone is to eventually be in the middle. Don't be content just being a generalist. You want to know a little more about this stuff.
Right.
Because if you're talking to your tax professional and everything they're saying is going over your head, well, by law, they can only really give you safe and secure advice because you don't know that much about stuff. If you know a little more about what they're talking about, then they can go into more detail and you can keep growing your knowledge.
That's a fact. That's a fact.
So we'll take one last question. Oh, entertainment nerd, I appreciate you checking us out. And Brooke, deducting pro bono work.
I'm glad you picked that one. I'm glad you picked that one. You cannot write off pro bono work, people. You cannot deduct pro bono work. So, for an example, Brooke's a social media manager. Let's say she went and did some work for the United Way, which is a nonprofit. She can't write that off. Let's say her rate is $100 an hour and she volunteers with them 10 hours a month. So, right, that's $1,000. Can't write off that $1,000. However, you can write off any materials that you might use to perform that duty or that job, and any mileage that you might have driven to perform that duty or that job as well. And the mileage rate for a nonprofit is not the same as a business. It's lower. I don't know it off the top of my head. But
I didn't know that.
Yes. Yep.
All right. She slid one more in. This will be the last one. Any book recommendations for educating ourselves on business taxes?
I would say, I'll be honest, go to the IRS, irs.gov. And I'll also say that anybody that's proposing something to you, tell them to show you the documentation or the tax code per IRS. And I would say irs.gov, it's not fun. It's not fun. I'm trying to think of anybody else whose books were good. I can't think of anyone else off the top of my head. If I think of some more, I'll definitely give them to you.
All right. So
I mean, just to be forthright, a lot of stuff that I'm reading is IRS tax code, and some of like the books they're like textbooks, so they're not like easy books to read. But I am coming out with like a whole series with a buddy of mine who's a tax attorney to start breaking down the tax code, so people can start unlocking the tax code and leverage it as much as possible.
All right. And if anyone wants to, and this for people who are listening on a playback or Facebook, we'll leave links to this in the description on YouTube. But if people want to work with you and also learn more about you, well, where should they go?
You know, it's funny. I just got a new phone number and I haven't memorized it yet. But anybody that wants to work with me, they can text me, right? So that's 215-974-0058. Again, 215-974-0058, and just put tax when you text me.
All right. So there we have it. We've had a tax Q&A for, we focused a lot on the gig economy, but we did branch off into taxes as far as a business owner in general, which they're really connected. I want y'all to really start thinking about that. Like, get out of this gig worker mentality stuff and start looking at yourself as a business owner. And things tend to get easier, to get more smoother. And when you're looking up information, you can digest it a lot better if you see yourself as a business owner and not just this gig worker stuff. So we're going to go ahead and end it there. Appreciate you coming on, Camari. And for those of y'all that are listening on Financial Anatomy, don't forget to get out there and take control of your financial destiny. And on the App Lifestyle, this phone, the world in the palm of your hands, it's a way to print money. Keep doing it, but also make sure you give your fair share of taxes. Don't be giving more than you need to, if that makes any sense.
No, that's right.
All right, Camari, I appreciate you coming on. I'll catch all of y'all later. Don't forget to subscribe if you're new and hit that like button. It's greatly appreciated. I'll catch y'all later.